Hey guys, what is up, and I welcome each and every one of you to a new Tesla update video. So yeah, let's go over the market. Let's see what happened with the stock market. Tesla, it's not pretty, man. I'll be honest, it's not pretty. So I mean, first and foremost, Tesla down over 4%. At some point in the day it was down over 5%. I think it was like actually at 6% at some point in the day too, when we were like all the way down at 801. Pretty sure that was around 6%. Not good. And like I said over the weekend and on Friday, how the thing that would make us, the unpredictable thing that would make us like, fall further is, well, if something happens with the whole Russia-Ukraine thing. And I mean, things did happen over the weekend. It essentially escalated even further. There's a lot more fear and uncertainty and doubt and all that stuff regarding that whole situation. And yeah, this is the result essentially. I mean, the index is actually not doing horribly bad. I mean, 1% on indices, it's a decent move down, but it's not like atrocious. 1% on SPY and QQQ, but Tesla 4% means that it, underperformed the market by a decent amount in all honesty. But the thing is, even like Apple was down 2%, which is quite a bit for Apple to be down 2% when, QQQ is only down 1%. Usually Apple and QQQ, I think, move in tandem roughly. So I mean, the whole market was, fairly red unless you're playing like super value stocks, and anything that's even remotely growth related got hit pretty aggressively. Now, we're in a weird spot. I would even call this like this kind of a weird limbo right now that we're in just the market in general, whether it's Tesla or the indices like, QQQ, SPY. Let me explain. So first and foremost, I'll give you guys the bad and the good. And I'll explain why we're in this kind of like weird limbo middle ground right now where, in all honesty, we can go either way. So the bad, I think the bad is quite obvious. We are below this trend line, well below it too, actually. We're not even like a little bit below it. We're just straight up below it. That's not good. Another thing that's not good is we're also below the 200 moving average. The 200 moving average tends to be extremely strong support for stocks in general, especially big cap stocks, mega cap stocks. We're under that as well. The 200 moving average is at 830. We're at 821. Not severely below it, but we are definitely like no doubt about it. We are below the 200 moving average. We couldn't hold that. That's also not good. Now, I do want to mention that, it's not that bad. Now, the reason it's not that bad yet, it could be, but not yet. Like, I wouldn't panic just yet. And the reason is because you can see here, let me just, hold on, there's like way too many lines here. Let me remove everything but the 200 because there's just way too many lines. The only one we really care about right now is the 200. Which is the green line. Even over here we did, gap below or drop below it, blah blah blah, we stayed below it and we just bounced back up and down over it, and then eventually we of course bounced up, right? So it's like going under it is not too bad. It's just a matter of, do we stay under it? Do we just maintain it? Does it act as resistance now? That's the question. So you can, like, way back here in like almost a year ago at this point, you can, make the argument that, oh, we dropped below it and then we kind of got rejected, dropped below it even further, and then we rocketed up, right? So, it's just like, it's not the end of the world, but it's just another kind of check mark on things that, of the list of like, okay, well, this is not looking good kind of thing. So that's not looking good. The good thing is the fact that, at least we didn't break below this low, which it was like, that 790-ish area, 792. The good thing is at least we didn't go below that. So at least, we're holding that. So that's not as bad. Another thing that, isn't horrible is the fact that the RSI is making higher lows, even though I guess this is technically making higher lows as well. So it's not like looking super bearish on the RSI yet. But the fact that we closed below the trend line is kind of bearish. And that's kind of, not really ideal in my opinion. Again, same thing with the indices. Now, this is the limbo part I was talking about, right? And the same with Tesla as well. We could be forming one of two patterns. One is a bullish pattern, one is a bearish pattern. It makes a lot more sense when you look at the indices though. So on Tesla, it doesn't really have the bearish pattern as much as the indices do. So Tesla can have like a double bottom right here. So boom, it's like a W double bottom pattern where you start up here, go down, bam, W. The little part in the W that goes up, of course, bam, bottom around the same area, and then we rocket back up. That's like a double bottom pattern, right? It literally forms a W. So that's a bullish pattern, assuming we don't break below this, like this bottom that we had here at like 800, essentially, roughly 790, 800, somewhere around that area. Assuming that this does not break well below, then this pattern is in play, and this could be a false breakdown, similar to how this was a false breakout. That is still very much in the cards. We'll see what happens with that. The thing with this is like we can insta rally back up the second we get any even remotely good news regarding the whole, potential war situation with Russia, Ukraine, especially if the Fed comes out and also gives us some dovish news. Any combination of that will make us just skyrocket back up pretty fast. But the flip side is also true, even though the flip side has been playing out for quite a bit. But now let's take a look at the indices. It's a little more obvious here. So you can see, you know, the bear flag played out. It's a little smaller bear flag played out. So those are done. But similar concept here. So the bearish pattern on the indices, the SPY and the QQQ, very similar pattern over here. You can see me remove these lines quickly because these lines are pretty much done playing out. So we have a bearish head and shoulders pattern on the indices, the SPY and the QQQ. You can see the shoulder here, head here, and we formed the shoulder here, right? That's a bearish head and shoulders pattern, which is not good. And the neckline is essentially this red line right around this general area. So thankfully we held above it today on the indices, which is essentially around this 426-ish, 427, that general area. You know, we want to ideally hold above that. And same with the QQQ, you can see it's a little bit less, you know, pretty looking, but, you know, very similar concept, shoulder, head, shoulder, and the neckline is essentially this massive red line I drew right here. So essentially we want to hold that, which thankfully we did today, which is good. But the second this breaks, this pattern plays out and it's going to be pretty ugly, and we're probably going to drop pretty aggressively. So the way you measure it usually is something like this. The top to, in this case, the top of the head to where the neckline break would be, which in this case is this. And then you measure it based on, if it breaks, this is how far we may actually drop, which is pretty damn far. This is like to 380s, which is like, that's a pretty big drop. So, you know, I absolutely hope that does not happen. Of course, that's going to be extremely brutal and pretty much a bloodbath. So far we held, which is good. So we'll see what happens in the upcoming days. But the bullish pattern here is the fact that we also could be forming, similar to Tesla, the bullish W/double bottom pattern, which is essentially, you know, we started up here, you know, we were chilling, kind of, you know, we couldn't break through, and then we started falling, bottom, bounce up, bottom, same bottom area, and now we can potentially bounce up and form the double bottom W pattern and follow through upwards. Those are the two things we're essentially looking at right now. Again, boom, W, second bottom, and then you run up and you essentially form the W, right? Same with the SPY. Boom, 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 and same with Tesla. Boom, 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 boom. Or you can even look up through here, boom, 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 boom. Similar concept regardless. The point is what you want to do is, now for Tesla, for instance, you want 940 to break. For the QQQ, you want something around the around this, like, you know, pretty much this 200 moving average to break, essentially, is what we want now. We want to go back up to this 200 moving average and also break it. And same with the SPY, similar concept, except it's a little bit higher. It's around 453 to 55, somewhere in that general range. We want that to break and hold. That's essentially what we're looking at. And that's why I say we're in this kind of weird limbo where it can go either way. It really just depends. It seriously just feels like it really depends on what happens to Russia or Ukraine. If an actual invasion/war happens, or it gets worse, there's a pretty decent chance we're going to break down and we're going to play out the bearish pattern. If anything happens with that situation regarding that, you know, things are easing up, that there's less tension, there's, you know, a lot more of an obvious path that's going to be taken that's obviously not related to having an actual, you know, invasion or a war, then the bullish pattern will probably play out and we're going to, you know, probably, you know, skyrocket. So it really just depends on what happens with that whole situation. I feel like that's essentially what a lot of people are waiting on, and the market itself is waiting on. So that's essentially what I'm seeing right now, guys. Again, not ideal that we are below this trend line, though. That is not good. You can see we kind of did retest it in the intraday and then got rejected, which is not good. Like, that's pretty bad. But I also said before how a break underneath something like this, like a trend line, is not the end of the world until it consistently stays under the trend line. Like, essentially, if this whole week we stay under and we don't break back up at all, and we end the week under this trend line, so essentially if we end here, if we end this week under pretty much 860, let's say roughly, if we end under 860 and especially under 850, that's bad. So we want to, at least, at the very least for Tesla, close the week at least at 850, ideally like 860, 865, and then I think we're fine. And I think that'll be actually setting up for an extremely bullish play into the following week, which will be the next week after this week, right? Of course. So yeah, we'll see what happens, guys. We'll take it as, you know, a day at a time, of course. I'm not too worried just yet, but, you know, again, I still have like 20% cash in my bank that I'm ready to, you know, spend if I need to buy more if we drop. But that would be like, I would be waiting to like 700 at that point. If the bearish pattern plays out, like, we easily will be dropping, like, at the very least, we'll drop to like 760, guaranteed. That will happen, absolutely. But I wouldn't be surprised if we drop even further than that to, like, again, like pretty much around 700-ish, give or take, maybe even lower slightly. But that cash that I have left, I'm saving for like a big drop. Like that would be, I'll be waiting for like 700 at least, if it happens, of course. I hope it doesn't, but if it does, I'll be using that opportunity to add to my position for the long run. Because again, I am buying for the long run. The short-term noise doesn't affect me. Like I'm not scared. I'm not nervous. I really couldn't care less what happens short-term. You know, I'll play it both ways. It's fine. I'm selling calls. I actually sold calls intraday. Then it's so funny. So what I did was I actually sold calls right here around this spike. All my calls. You know, it was good. It was good money. And then it plummeted. And then I rebought them back here. And they were like literally over 50% off already. Like it was disgusting. Like the premiums just plummeted. So I think I sold one of them for 11.75 and I bought it back for 6.13. Another one I sold it for 4.71, bought it back for 1.95. Crazy how fast that plummeted. But yeah, that's essentially what I'm seeing, guys. Let me know what you guys think down below. Thank you all so much for watching. See you for the next one. Peace.